Well, just like Walter Deemer said, the stock market bulls just got Fitch-Slapped. As we know, Fitch rating agency downgraded the U.S. credit. People are calling it ridiculous. We just saw a 1.38% down day in the S&P 500. We haven't seen a down day like this since really April, late April of this year. We're going to talk about levels to pay very close attention to if price wants to start selling off more and or recover, and really go over some very important events that are coming up that could trigger potentially even more volatility. So it's a time to be obviously cautious. We're going to hop right into it today, looking at the S&P 500. So where did we pull back to? Pull back into the quarter-to-date anchored VWAP. And what happened? We broke down through this bearish engulfing candle that we have been tracking for some time. Actually, the day that it happened, we launched a video, or I launched a video that really explained the thought process and the psychology behind this candlestick. And we had said that, hey, it's likely that we can see moves up, but then we just consolidated within it and finally broke there today, coming to that quarter-date anchored VWAP. If you look at the weekly time frame, we actually came into the 5-weekly EMA, which is one that we've been talking about at the beginning of the week, right? It typically reconnects at some point. Well, we just reconnected at today, and it's still an inclining moving average as of now. If we do get more sell-side action in the S&P 500, we'll look at the SPY, but I'll show you the ES here momentarily. A level to obviously watch is where we saw prior resistance. Once resistance was broken, it can become a potential level of support. So if it does come down there, I'd be looking at ES. There is a huge order here on the book map, around 1,700 contracts. That's at 44.05. So if price action gets down there, this would be a level to just kind of keep in your back pocket. If you don't know what book map is, this allows you to kind of see behind the candlestick. It allows you to see where orders are hiding out. And it really works well for intraday trading, something that I use. And there's a link below if they offer my subscribers a discount if you want to check it out. If we take a look at the 15-minute time frame on the SPY, you can see we came into that quarter-to-day anchored VWAP, and we're finding some support as it stands right now. We cracked outside of the weekly expected move, and because of that credit report, maybe not because of it, but we just needed some sort of a trigger. We got it, and that gave us a 2 standard deviation move, which kind of discussed on yesterday's episode. Okay, now we're going to update these daily expected moves, and I'm going to show you what they look like now. So if the quarter-to-date anchored VWAP gives out, pay attention to 446.74 tomorrow, and then to the upside 453.55. Now, remember, 68% of the time, if you're looking in probabilities, we close within those weekly expected moves, daily expected moves. So is it likely that we potentially see some sort of reflexive bounce in? I'd say yes, it's always possible. Now, if we start getting up to 453.55, I want you to pay attention to the week-to-date and month-to-date anchored VWAPs. Also to note, the 5-day moving average is rather neutral, and if it starts curling back down, right, these could act as potential areas of resistance up there, okay? But we'll talk about the events here that are going to be coming after the bell on Thursday, and also early morning Thursday and Friday. But this is where, when we're below the 5-day moving average, is where you want to be a little bit more cautious, because this is actually more now neutral, bearish with cautious. But if it starts really curling itself back over and go into a decline phase, you want to just watch out and be on the lookout there. If we take a look at the Qs, we also cracked down through that weekly expected move, the upper daily expected move. If we come back up into it, that would be back around just above the quarter-day anchored VWAP, which we've been talking about, has been holding on for dear life. Potentially sentiment can change when it's under it. Well, it's under it, so we'll see if it holds below it. If we start getting a reflexive bounce up, right, 378.59, we'd still be right around the month-to-date, week-to-date anchored VWAP. So just be cautious, be careful in this area from a long perspective. I want you to go ahead and take a screenshot of this. This is the daily expected move, something that I share with my Patreon group every single day. For these products over here, this is what the daily expected move is based off implied volatility. This is the upper level, lower level, and I also share the 2 sigma levels just in case if they were to come, but I didn't want to really go into more depth on the Q, so I figured if you want to take these numbers, screenshot them and put them on your charts. Interesting chart that I want to pay close attention to moving forward too is the semiconductor ETF, SMH. Now, obviously a big holding is NVIDIA. NVIDIA's been, a mega cap name that's been doing, that really helps move the NASDAQ composite, helps move the NASDAQ 100, helps move the S&P 500. And if these big mega cap names start breaking down, it's going to be obviously could create more sell side activity overall if we get higher degrees of correlation. Now, as it stands right now, we're in a bull channel. We have been having that negative divergence form, and you can see we're just pinging around. And what I've labeled here is multiple mini trends kind of within it, where if we broke down, we saw some sell side to the lower, we had a nice trend up, we broke down. You can see we flagged right over here, we broke out, and then we kind of just been holding the upper level. But now we're kind of coming into this level here that if it breaks down, I mean, it could be likely that we go test the 150 to middle channel, or potentially even lower to around that 140, which would be the lower portion of that channel. We did see a big volume day today, right? So this would be considered distribution. It could be some sort of an advanced type of like, head and shoulder topping type pattern, if you look at it like that. But this is something just to be obviously cautious of. Now, some events that are coming up is going to be the earnings reports with Amazon and Apple. This could get crazy. The reason why is because, remember, we're outside of the weekly expected move for the SPY. So if the market perceives that these earnings reports like Apple as bad, or even Amazon both as bad, it could create a lot more selling into selling, which creates a lot more volatility overall. However, if they perceive it as good news, well, the market can snap right back within that 68% of the time, the weekly expected move. Okay, so that's not the only thing. I want to also share you a chart of Apple. Apple did kind of crack that trend, and we said when it cracks, don't be surprised if we get some sort of a back test or move up. That's always possible, but also be mindful that we have earnings, right? So even though it cracked, we have a huge catalyst event that can snap us right back up to the upside, or really perpetuate a snapshot to the downside. Tomorrow we have ISM Services PMI. This is an hour and a half or so into the open. So 7 a.m. Pacific Standard Time, 10 a.m. Eastern Standard Time. And then Friday we have the jobs numbers coming out there too as well. So we have earnings, we have macro data. We're seeing more volatility as it stands right now. We see a big level. These levels can hold as magnets potentially the longer that they stay there. So you got to just be on guard as the price action of the S&P 500 and the Qs are floating below that 5-day moving average. This is where you just got to be very cautious. Okay, now overall, if I take a look at something like the Dow Jones, yeah, we saw a down day, but remember, even if we were to come back here, this would just be considered a back test of a prior breakout. Okay, so that would be scary to a lot of people, but if you see strength after that and it starts moving up, that could be a potential opportunity to buy into the strength on the dip and then potentially play it to that all-time high up here. That always is a possibility, okay? So that's something from a bullish perspective. IWM, same thing. It's been floating up. It's been on a big run. To see it consolidate or pull back to around these breakout levels is totally normal, but just be aware that it could be, it could be frightening for some, but if you don't buy the dip, but if you wait for it to start turning around and see some strength or build a base or look at lower time frames, that could create opportunities. Another big thing to watch is obviously the 10-year yield. 10-year yield today cracked 4.1% or 41 on the TNX. If I look at the line kind of just going across here, this has been a pretty key level. As you can see, when we broke down through it, we saw a big flush. It acted as resistance. We flushed, resistance, and we got above it today. However, it snapped back within it. So if we start breaking out, just be aware that we could see a big shot right to around that 4.3% range, which would be pretty intense, given the fact that we've seen strong moves in the 10-year yield also affect many growth names. Now, also to pay attention to what we said on yesterday's video in 2011, we actually saw the 10-year yield back off on the credit downgrade, and we saw bonds start to take off. So that's always an opportunity, but it's going to be something obviously to watch as volatility is really high in the markets. That's all I got for you on today's episode, everybody. Have a wonderful night.